Picture this. You're one of 55 million Americans literally on the edge of your seat watching this historic record-breaking soccer match in New Jersey.
Right.
The vibe is electric, the rules are super clear, and, the stakes are totally confined to this one patch of grass.
Yeah, a massive shared moment.
Exactly. But at that exact same moment, half a world away, a military missile tears through the smokestack of a commercial oil tanker.
Wow.
And that strike is threatening to paralyze the entire microchip supply chain that, ironically, built the very television you are watching the game on.
It's a crazy juxtaposition.
It really is. So welcome to today's deep dive. We are so thrilled to have you with us as we dig into a massive stack of daily news sources from today, July 16th, 2026.
Lots to get through today.
Oh, absolutely. Today's mission is really to make sense of this deeply fractured reality we're living in. We're looking at a snapshot, a highly volatile day, where these massive geopolitical shockwaves are, well, they're colliding directly with the global economy, the technology sector, and some intensely extreme physical and cultural events.
It is a lot of friction all at once.
It is. Okay, let's unpack this. To really understand the forces at play today, we have to start at the epicenter. Because looking at the sources, every other story in our stack feels like a direct reaction to the escalating military situation in the Middle East.
Yeah, I mean, it is the absolute baseline for global anxiety right now. The military and political friction between the U.S. and Iran has intensified to a level that is physically reshaping global supply lines.
Right.
We are way past the point of just, diplomatic posturing. The U.S. has significantly expanded its military strikes into northern Iran.
And that's a geographical shift, right?
A huge one.
Yeah.
They are specifically targeting command centers, air defense systems, and missile sites much further north than any of the previous engagements.
And, the escalation isn't just happening on land. The maritime component detailed in these sources is just wild.
The naval aspect is terrifying.
There's this specific incident with a Curacao-flagged oil tanker called the Belma. U.S. Central Command actually fired a missile that disabled the ship by hitting its smokestack.
Right.
And this was after it basically ignored multiple warnings while approaching Karg Island, which that's Iran's primary oil terminal.
Right. Karg Island is their main hub.
So why target the smokestack specifically? Like, why not just sink it if it's hostile?
Well, it's a highly calculated, basically a high-wire act of kinetic messaging.
Okay.
If you sink a fully loaded oil tanker, you create this catastrophic ecological disaster.
Oh, right, obviously. The oil spill.
Exactly. Plus, you essentially blockade the waterway with a sunken hull. So by hitting just the smokestack, CNTCOM destroyed the ship's propulsion and exhaust systems.
So it's just stuck there.
Immobilized. They stopped a massive vessel with surgical precision, rendering it a floating roadblock, but without spilling millions of barrels of crude.
Wow.
So it demonstrates overwhelming U.S. capability, while, theoretically anyway, trying to avoid total escalation.
Right, but just looking at the retaliation we are seeing in the sources, that attempt to avoid total escalation seems to have completely failed.
Oh, it definitely has. I mean, this marks the 6th consecutive day of direct traded fire between the two.
6 days.
Yeah. And in response to the tanker, Iran launched a massive swarm of drones and missiles targeting U.S. military bases across Bahrain, Jordan, and Kuwait.
And the numbers on this are insane.
Just to understand the sheer volume of this exchange, Kuwait's defense ministry confirmed they intercepted 32 hostile drones just since dawn.
Wait, 32 drones just since dawn?
Just since dawn. And we're seeing reports of debris falling into residential zones.
Oh my God.
Now, thankfully, there are no casualties reported there yet, but the sky is literally saturated with munitions right now.
Reading through the timeline of this whole diplomatic breakdown, it feels less like a negotiation and more like trying to balance a high-voltage power grid.
That's a good way to look at it.
Right. You spend months painstakingly balancing the load across all these different nodes, but if one transformer blows, the surge just cascades and melts the entire network in 3 weeks. It's like a giant Jenga tower. Months to painstakingly build it up, but just one wrong move and it completely collapses.
Yeah, the speed is staggering.
There was this quote in the sources from Ali Veyes from the International Crisis Group. He's actively warning of a, quote, forever war.
Yes, that quote really stood out.
He pointed out that it took 2 full months to negotiate the Memorandum of Understanding between the two sides.
2 months of back and forth.
Yeah, and then just 3 weeks for the whole thing to completely unravel.
And the speed of the unraveling is exactly what has global markets so panicked today.
Right.
Because the collapse of those diplomatic guardrails brings us to a terrifying logistical threat.
The choke points.
Right. The Islamic Revolutionary Guard Corps, the IRGC, is now openly threatening to close the Bab-el-Mandeb Strait. Iranian state media is literally broadcasting warnings that regional oil and gas exports will be available to everyone or no one.
Everyone or no one. That is chilling. And reading further into the stack, it looks like the Houthis in Yemen are operationally backing them up on this.
Yes. A senior Houthi official stated they are prepared to enforce that closure in a direct operational alliance with Iran.
Okay, so if we step back and look at a map for a second.
Right.
This means we are facing the credible threat of a simultaneous closure of both the Red Sea passage through the Bab-el-Mandeb.
And the Strait of Hormuz.
Exactly. Both at the same time. Now, looking at how Washington is responding to all this, the sources highlight a $95 billion Iran war bill currently advancing in the House.
Yes, that's moving fast.
It is. It's being pushed heavily by Vice President Vance and Speaker Johnson, though it's worth noting it is facing some stiff bipartisan pushback on a few key provisions.
Yeah, it's definitely not a smooth process.
Right. And just to frame our discussion for you, the listener, I want to be super clear here. We are looking at this bill purely as a geopolitical data point.
Absolutely.
We are just mapping the political friction exactly as it is laid out in the text. We are not taking any sides or, endorsing the legislation or any specific viewpoints ourselves.
No, not at all.
It is simply crucial context for how the U.S. government is physically positioning its resources right now.
Right, and understanding that legislative momentum is critical because it tells the global markets that the U.S. is financially preparing for a protracted engagement.
Not just a quick de-escalation.
Exactly. They are digging in.
So let's talk about the actual logistics of that engagement, because I kind of want to push back on the idea of this dual choke point threat.
Right.
Closing both the Red Sea and the Strait of Hormuz at the same time sounds incredibly apocalyptic, sure. But how does that actually work mechanically? Like, can they actually sustain a blockade of that scale?
Well, it requires an unprecedented level of coordination, yes. But physically, yes, they can, because geography basically does the heavy lifting for them.
How so?
Well, the Strait of Hormuz is only about 21 miles wide at its narrowest point.
That's tiny.
It is, and the actual shipping lanes in both directions are only 2 miles wide.
Oh, wow. I didn't realize it was that narrow.
Yeah, so if you mine those lanes, or even just target a few ships with coastal anti-ship missiles, maritime insurance completely evaporates overnight.
And without insurance, the ships don't move.
Commercial ships will absolutely not sail without insurance. Now, if you threaten just the Red Sea, global shipping kivets, it costs massive amounts of time and fuel to sail all the way down and around the Horn of Africa.
Right, we've seen that happen before.
Right, but the supply chain eventually adapts. But if you close Hormuz at the exact same time, you trap massive percentages of the world's seaborne crude oil right at the source.
So they can't even get out to take the detour.
Exactly. You aren't forcing a detour anymore. You are applying a tourniquet to the global energy supply.
So what does this all mean for the immediate economic reality for everyone listening? Because that tourniquet is already squeezing the markets today.
Definitely.
I noticed in the sources that Brent crude oil is holding above $83 a barrel. And it's specifically reacting to the news that the U.S. struck that Iranian electrical infrastructure.
Right.
But what really caught my eye was how this is impacting corporate earnings right now. Take GE Aerospace, for example. On paper, it looks like they had a phenomenal quarter, but their stock took a hit. What is the disconnect there?
The disconnect is entirely tied to the price of that oil. GE Aerospace totally beats their Q2 estimates.
Right, and they even raised their 2026 profit forecast.
Which usually sends the stock soaring. Right?
Yeah, normally everyone cheers.
But shares fell 4.4%. Yeah. And the mechanism here is their customer base. Airlines buy GE engines and parts.
Okay, I see where this is going.
Yeah. And those airlines, like United Airlines, whose stock fell 2.8% today, they are getting absolutely crushed by fuel costs.
Because jet fuel is directly tied to crude oil.
Exactly. The surge in crude oil is wrecking the airline's profit guidance for the rest of the year. So investors are looking at GE and saying, look, your numbers are great today, but your main customers won't be able to afford your products tomorrow if oil stays this high.
Wow. But then you have healthcare stepping in as this weird stabilizer in the market. United Health Group had a massive beat.
Massive.
The sources show they brought in $110.8 billion in revenue with an EPS of 4.84, and their shares actually rose amid all this chaos.
Right. And just to clarify for anyone who doesn't, stare at financial terminals all day, EPS is earnings per share.
Good call.
It's essentially the company's total profit divided by its outstanding shares. So it's a quick way to gauge how much money they're actually making per slice of the pie.
Got it.
And UnitedHealth's EPS beat estimates because their cost management was much better than Wall Street feared. In a highly volatile, inflationary environment like today, investors aren't just looking for growth. They are looking for predictability. If a massive healthcare conglomerate proves they can control their internal costs, while a literal war breaks out overseas, capital flocks to them.
And speaking of capital flocking, gold is just going parabolic right now.
Oh, yeah. Gold is on a tear.
It's holding above $4,130 an ounce for the 5th straight session. The sources say it's up 11% in just 3 weeks.
It's the classic safe haven.
Right. But here's where I want to challenge the prevailing narrative a bit. Are we attributing too much of this economic anxiety specifically to the missiles in the Middle East?
What do you mean?
Well, because the sources also show that June retail sales broadly missed Wall Street estimates.
Ah, yes. The consumer pullback.
Exactly. That indicates everyday consumer spending was softening way before this specific week of military escalation. So is the consumer already tapped out?
Well, if we connect this to the bigger picture, you are hitting on the fundamental tension in macroeconomic data right now, which is the lag.
The lag.
There is a distinct delay between everyday consumer behavior and real-time geopolitical fear. The retail sales miss tells us that the average household was already buckling under the cumulative weight of inflation and higher interest rates weeks ago.
Right, before the tankers were getting hit.
Exactly.
Yeah.
The real pain of oil staying above $83 hasn't even hit the gas pump or the grocery store shelves yet in these June numbers.
Oh, wow. So the spike in gold represents the fear of tomorrow, but the drop in retail sales is just the reality of yesterday?
Precisely. Gold operates as the ultimate physical safe haven asset. When institutional investors look at a dual choke point blockade and see zero diplomatic off-ramps, they move out of risk-on assets.
Because they want something tangible.
Right. They move into gold because it isn't reliant on a digital network or a specific government's fiat currency. The everyday consumer, on the other hand, doesn't buy gold bars to hedge against conflict.
Yeah, they just stop going out to eat or buying extra clothes.
Exactly. They just pull back.
Which brings us to the technology sector. And honestly, this is easily the most bizarre paradox in the entire stack of sources.
It really is a massive disconnect.
We've looked at the macro dread, but zooming in on tech, the geopolitical fear is completely overriding some of the most explosive, positive business fundamentals imaginable. I was looking at Taiwan Semiconductor Manufacturing, TSMC.
Yeah.
Their numbers look like they belong to a different economy entirely.
Oh, their Q2 report was a historic blowout. We are talking $40.2 billion in revenue.
Which is huge.
That is up nearly 34% year over year. Their earnings per share came in at 4.31, easily beating the 3.87 consensus.
Wow.
And the most crucial metric for them, 77% of their wafer revenue came from advanced technologies.
That's the AI chip demand, right? Because management was quoted calling AI demand extremely robust.
Extremely robust.
And the sources point out that TSMC is driving this massive industry transition right now, moving from generative AI to agentic AI.
Okay.
Let's unpack this. What exactly makes an AI agentic, and why is it requiring so much new hardware?
So generative AI is what we've all grown used to over the last 2 years.
The chatbots.
Right. Chatbots that write emails for you, or systems that generate images from text prompts. It responds to you.
Okay.
Agentic AI, though, is a system that can autonomously take actions on your behalf across multiple platforms.
So it does things without you asking every step.
Exactly. It can analyze a problem, formulate a multi-step plan, write the code, execute the software, and even book your flights, all without you holding its hand.
That sounds incredibly complex.
It is. And to process that level of autonomous reasoning in real time requires an exponentially larger amount of computational power.
Ah, hence the new hardware.
Yes. That is exactly why TSMC is initiating a record $40 billion plus capital expenditure push for 2026.
$40 billion just on factories.
Specifically to build 2-nanometer production facilities. They simply cannot manufacture these chips fast enough to satisfy the hyperscalers.
And by hyperscalers, we mean the massive tech giants, right?
Exactly. The Amazons, Microsofts, Googles, and Metas of the world. The massive cloud infrastructure providers who buy these advanced chips by the tens of thousands to run their data centers.
But here's the paradox. Despite all of this incredible forward-looking news, despite the $40 BL investment, semiconductor stocks completely tanked today.
He took a beating.
The Philadelphia Semiconductor Index dropped 3.8%. TSMC's own stock, or rather their ADR, which is how U.S. investors buy their foreign shares, fell 2.5%.
Yep.
Western Digital and Seagate both dropped over 7%. I mean, it's like TSMC is this incredibly exclusive restaurant with a 10-year wait list for reservations, right?
Sorry.
But the value of the restaurant is dropping just because investors see this massive storm forming miles away.
That analogy perfectly captures the mechanism of the fear right now.
Because it doesn't make sense on paper.
Not if you only look at the tech. We're witnessing an undeniable technological paradigm shift with agentic AI. But the physical reality of building that future is deeply fragile.
You need the hardware.
You can invent the most sophisticated software algorithm in the world, but you cannot email a physical silicon wafer.
Great.
Fabricating a 2-nanometer chip requires ultra-pure chemicals, neon gas, and deeply complex lithography machines that have to be physically shipped across oceans.
And if those oceans are blockaded?
Or if conflict spills into the South China Sea, the entire manufacturing pipeline freezes.
Instantly.
Yes. Investors aren't selling TSMC because they doubt the AI revolution. They are selling because a war in the Middle East, severing the energy supply, combined with the geopolitical vulnerability of Taiwan itself, could instantly choke off the raw materials needed to run those fabs.
It is the ultimate collision between digital ambition and physical geography.
Exactly.
And, it isn't just the hardware companies feeling the weight of this macro anxiety. We are looking at Netflix reporting their earnings tonight after the closing bell.
Always a big event.
Right. And the sources show they're targeting $12.58 billion in revenue with a massive 32.6% operating margin. But the real story is in the options market.
The volatility pricing.
Yeah. Traders are pricing in an 8.9% swing in the stock in either direction. Investors are hyper-focused on their ad-supported tier and rumors of a live TV strategy. But why is the market pricing in such a violent potential swing for a streaming company? They don't rely on shipping lanes.
No, they don't. But because when macroeconomic dread is this high globally, the market strips away all margin for error.
Oh, I see.
A slight miss on subscriber numbers or even a beat that's accompanied by cautious forward guidance gets punished severely.
There's no patience.
None. In a high-interest, high-tension environment, investors demand immediate execution, not just promises of future growth. Every tech giant is under immense pressure to prove they can navigate this incredibly tense global landscape.
All right, we really need to bring this conversation down from the abstract anxieties of markets and AI straight into the deeply physical reality that people are experiencing on the ground right now.
Yeah, it's been intense.
Because the extremes of the human experience detailed in today's sources are, well, they're jarring. Let's look at the weather data.
It has been a historically brutal week on the East Coast of the United States.
I mean, brutal is an understatement.
So a cold front is finally sweeping through the Northeast today, which the National Weather Service says will bring a 15 to 25 degree temperature drop to the I-95 corridor by Friday.
Thank goodness.
But that relief comes only after an absolutely punishing heat dome peaked on Wednesday. Philadelphia hit 107 degrees. New York City hit 103 degrees.
107 in Philly. That's dangerous.
It is.
And the mechanism behind that heat is wild, too. The sources talk about the urban heat island effect, basically trapping this stagnant air in these concrete grids.
Right, the concrete just absorbs and radiates it back.
And then it was compounded by Canadian wildfire smoke that was blanketing the Midwest and Northeast, though thankfully that smoke is finally expected to clear by Saturday.
Yeah, the air quality was terrible.
But the human toll is devastating. Public health officials have confirmed at least 23 heat-related deaths nationally so far. The CDC is officially ranking this heat wave among the top 5 most deadly in recorded U.S. history.
It is awful. The tragic reality of extreme weather events is that they ruthlessly target the most vulnerable infrastructure in populations.
Always.
The elderly, unhoused individuals, and those working outdoor manual labor jobs disproportionately bore the brunt of this heat. It is a stark, very physical reminder of the limits of human endurance when environmental conditions outpace urban infrastructure.
Yeah. Which actually brings us to a really profound juxtaposition. Here's where it gets really interesting.
Yeah.
In the exact same geographic region, the New Jersey and New York metro area that just endured this lethal heat wave, we are about to witness a massive shared cultural spectacle.
Oh, the World Cup.
The World Cup final is kicking off this Sunday at MetLife Stadium in East Rutherford. It's Argentina versus Spain.
The narratives heading into this match are practically scripted for Hollywood.
They really are.
You have 38-year-old Lionel Messi playing what the entire world expects to be his final World Cup match.
The end of an era.
Completely. And Argentina is looking to secure a back-to-back title, aiming to be the first team to do that since Brazil in 1962.
And standing in their way is a Spanish defensive line that has conceded exactly one goal across 6 entire tournament matches.
One goal. That's insane.
It's the classic unstoppable force meeting an immovable object. But looking at the viewership metrics, this is where it ties back into our macro discussion. Wednesday's Argentina-England semifinal drew 47 million viewers in the U.S. across Fox and Telemundo.
47 million for a semifinal.
That is the largest non-final soccer broadcast in American history. For Sunday's final, they are projecting upward of 55 million viewers.
Wow.
If that holds, it will be the most watched sporting event of any kind in U.S. television history.
What's fascinating here is the sheer economic gravity an event of this scale generates.
The money is staggering.
FIFA and U.S. host city officials project the total economic impact across all 16 North American host cities at roughly $8 billion.
$8 billion?
And the New York, New Jersey metro area alone is expected to capture $1.5 billion in direct economic activity just from hosting this final match.
That is massive for the local economy.
It is. Both teams are already deeply embedded in the region. Argentina is training at Red Bull Arena. Spain is utilizing the MetLife practice facilities. The entire region has essentially transformed into the focal point of the globe for the weekend.
Right.
And broadcasters are fully aware of this leverage. Fox and Telemundo are already using these record-breaking ratings to aggressively position themselves in negotiations with FIFA for the 2030 tournament rights.
Okay, I have to pose a philosophical question to you then.
Sure, let's hear it.
Look at the breadth of everything we have discussed today. We have a potentially deadly, escalating conflict in the Middle East threatening the physical arteries of global energy.
Right.
We have markets gripped by geopolitical dread despite massive AI innovation. We have deadly, historic heat waves claiming lives.
It's a lot of darkness.
It is. So is this projected 55 million viewer milestone really about a sudden American obsession with soccer? Or is it more about a desperate need for global, unified escapism? Are people just starved for 90 minutes where the rules make sense, the playing field is literally level, and no one was firing a missile?
That's a great question. But I think it goes deeper than escapism.
Really?
Yeah, because escapism implies we're just running away from the news. What we're seeing here is a fundamental human drive for connection.
Connection. Okay.
Think about the themes of this week. Fragmentation, right? Diplomatic agreements are snapping, physical supply chains are fracturing, and extreme weather has forced people into physical isolation indoors just to survive the heat.
That's very true. Everyone is sort of bunkering down.
Exactly. The World Cup represents the exact inverse of that fragmentation.
Yeah.
It is a moment of profound, synchronized human experience. You have tens of millions of people speaking different languages across different continents, mutually agreeing to care deeply about the exact same thing at the exact same moment.
Wow.
It is a temporary but incredibly powerful antidote to the isolation of modern geopolitics.
A temporary antidote to isolation. That is a fantastic way to frame it. Well, we have covered incredible ground today.
We really have.
We started by mapping the mechanics of the escalating conflict in the Middle East, breaking down how missile strikes on oil tankers and dual choke point blockades threaten the very physics of global trade.
Right.
And then we followed those ripples directly into the markets, watching airline stocks struggle with fuel costs while capital flees to the physical safety of gold.
The flight to safety.
Yep. Then we navigated the bizarre paradox of the tech sector, where TSMC's multi-billion-dollar push into agentic AI is being completely overshadowed by the extreme fragility of the silicon supply chain.
The physical reality of the digital world.
Exactly. And finally, we brought it all back down to earth, contrasting a historically deadly U.S. heat wave with the unifying multi-billion-dollar spectacle of a World Cup final in the exact same region.
It truly is a remarkable snapshot of humanity's current operating system. We are simultaneously capable of profound technological brilliance and devastating systemic fragility.
Perfectly said.
But as we wrap up today's deep dive, I actually want to leave you, the listener, with a thought that pulls a few of these threads together.
Oh, lay it on us.
We discussed TSMC and the rapid industry shift from generative AI to agentic AI. These systems designed to autonomously execute complex plans.
Right, the AIs that take action.
Exactly. Well, given the intense fragility of the global systems we've explored today, how long will it be before these highly capable AI agents are the ones autonomously managing our supply chain reroutes, or perhaps even analyzing game theory to negotiate diplomatic treaties during geopolitical crises?
Oh, wow. I didn't even think about that.
Right. It raises a really important question for the near future.
Yeah.
Will removing human emotion from the equation finally prevent a, quote, forever war? Or will removing human intuition end up making the escalation much, much worse?
That is a staggering thought to chew on as we watch this new era unfold. Well, thank you for joining us today and for trusting us to help navigate the noise.
It's been a pleasure.
We appreciate you taking the time to unpack all of this with us. Until next time, stay curious, stay informed, and take care out there.